All righty, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach with Schwab. And man, oh man, what an interesting week. Interesting. I've got air quotes around that, folks. It has been in the market. We are going to look at today how to determine like how we as smaller account owners or perhaps large account owners who want to trade a small part of it, how we might take advantage of everything that's been happening in the markets. And we've got a lot of stuff that we want to have a conversation about today, including how can we tell when things are on sale? And it looks like everything's gone on a massive, sale this week since the latest round of tariff announcements after the market closed on Wednesday. But how can you be confident when there aren't further reductions still to come? So we're going to talk about that and a number of other things as well. I want to thank you all for being here. And I want to commend you for it, because a lot of people right now, they are taking their laptops, they are closing them, they're going for a walk, or they're golfing, or they're saying like, I just have no idea what to do. And so I am just going to walk away and do nothing, the head in the sand approach. And I've talked about this a couple of times before. I so applaud you for keeping your laptop open and for looking at this as the opportunity that it can potentially be to, one, protect your giant heap, or your not so giant heap, your heap, whatever size it may be, and to perhaps capitalize on what is currently happening in the market. And what really drove me to get involved in this industry and to ultimately become a coach was in 2009, 8 and 9, which is now called the Great Recession, referred to as the Great Recession. I got clobbered along with everyone else. And I knew there was a way to make money as the market was falling. I just didn't know how. So I was what you would call consciously incompetent. I knew I didn't know how, and I wanted to figure it out. And I went looking for education. And when I found it, I was so excited my car could have driven itself home. That was the beginning of July of 2011. I joined as a coach in 2016. And with the exception of last year, I've been teaching this class, I don't know how long, 5 or 6 years. And the most successful year we have had, other than last year, was about 3 years ago when the S&P was down 18 or 20% on the year, and the NASDAQ was down almost 30. So there can be gold amongst, the red, the seas of red that we're seeing. And we're going to look at how, we might take advantage of that. Okay. And so, and I know I don't have to say this, but tariffs have had obviously a direct impact on the markets. We're going to look at that in just a minute. Our chat is very, very robust, and I love you guys for making it that way. But let's keep our comments trading related and trying and keep the politics out of it. We're all in this sandbox together, and let's just continue to play nicely as we always have in this class. It's one of the things I love about this community. It's really a very respectful group, and you guys, every one of you that I've met, all I can say is we have a lot of class acts in this room, and I know that that's not going to change. Okay, so we've got Connie Hill with us in the chat. She's a friend and fellow coach. If you're not following her, you're missing out. Somebody said, hey, that thing you post on X all the time, the 12 grids with all the, with all the sectors, like, can you show me how to do that? And I know that Connie will. She just can't do it today within the framework of this class, but look for a short video maybe coming on how to set that up. But you'll want to follow her on X or you're missing out. Connie Hill CS and Barb Armstrong CS. And no, there's nothing like the original. If anybody reaches out and offers you a crypto, a Bitcoin deal, to trade your account on your behalf, if you'll just give us the login, that is not us. That is a scammer and a thief. So beware. If somebody reaches out to you, please take a screenshot so we can get these ne'er-do-wells shut down. Okay, know that, we do look at a lot of opportunities in this class. Know they carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills before you consider consider trading in your live account. One of the differences, though, between paper money and a live account is that short options won't be assigned early in paper money. That can happen in a live account. If you haven't been to a live event, it was really how I was introduced to this education. I was in Chicago a couple of weeks ago for, the first advanced options event that was held this year. Kevin is going to be in Detroit next weekend for an intro to technical analysis and then an intro to options along with the fabulous Mr. Ben Watson. If you've never been to one of these events, one, I'd sign up like PDQ for these because they fill quickly. When I checked with someone yesterday, there were like 10 spots left in Dallas. So if you think you'd like to go, register. I mean, they're free to attend. We'll provide breakfast, we'll provide lunch, we'll pay for your parking. We don't pay for your hotel, but there's no charge to come. So check these out. And then I will be at that event, and then Kevin will be at the Denver event, and Ben is on the stage for all of them. So you may want to consider checking that. Okay. Okay, so I'm just having a look at the comments. Kevin is saying, every time I do a bearish strategy, it tends to go against me, and I'm sitting, but my butt is getting numb. And I hear you, but there are worse things than a numb butt. So yeah. And Riceberger saying, keep the philosophical trading quotes handy. I don't know if I hit you with any yet, but, stay tuned. I don't have a heap, just a pile. Yeah. I just kind of like that phrase because it's, I think it's kind of catchy. Yeah. Okay. So let's continue on here. So let's get out and have a look and one, look at not just managing the damage, but look at how we might capitalize on that. And unfortunately, we didn't get to meet yesterday. But, when we look at the S&P, it is now down 12% on the year after being up over 20% last year. And so, we're coming back here. We hit that low last August 5th. Holy crow. That's... that is really sobering. And since the end of day Wednesday, if I take my drawing tool, and guys, if you're not going to Trader Talks at the market open, you're doing yourself a disservice. Yeah, Kevin Horner teaches that, I think 4 days a week at the market open. At one point down almost 10% in 2 trading days. And we've started to rally a bit off the bottom, but still down 8.7% in 2 trading days. And so, that is sobering. And, similar on the NASDAQ, 10.5, and then on the Dow. Wow, this looks, 8%. I would say this looks worse, but it's the same kind of thing, right? 8%. I can get rid of these other drawings. So if you want to here's a quick way to remove your drawings, just clear drawing set. So there we have it. And, again, here was our August 6th low. So this is a 9-month low. And, we're approaching that. And if we look at a 1 year, these are not joyful charts. When we look at our small caps, we're looking at a 12-month low now. And again, probably down in that neighborhood of 8%. %13. Dang. Okay, and then let's look at the VIX. And yesterday, holy smokes, we hit 45. We're at 39. Okay, so what does this mean? What does this mean? And given we've had this huge pullback on these indexes, and then if we come and we look at these sectors, There isn't a single one that is up today. Now, yesterday, utilities wasn't up. Consumer staples, had a green candle. It was up. But it's down. Everything is down today, and volatility is really up. So should we be buying or selling? Should we be buying or selling if we're looking at options? Well, what we might want to do is look at selling, because volatility is so high. Now, if you think volatility is going to continue to go up, you might not. But when we look at this, and every single sector is down today, if we click through them, look at energy. We're now at a 1-year low on energy, 1-year low on materials. That just dove out a window. Industrials, how they say stocks take the stairs up and the elevator down? This is elevator time. But, we could end up with a deep V pattern if, things change with respect to the current tariff outlook. The market might rebound. Now, I'm not psychic. I don't know. But there are many out there who have speculated that a change in that direction might have a positive impact on the market. But there's so much uncertainty right now. A lot of people may just go to cash and say, I'm willing to have a numb butt, or I'm willing to just maybe not have a numb bum, but I'm going to go to cash and stay there and get out and walk and live my life until this settles down and I feel confident. And another thing that I want to talk about here is I heard somebody saying, and I don't even know how I ended up in this room, and it was Wednesday evening. It was around 9:00 at night. So that was 9:00 Mountain Time, 11:00 Eastern. So it was late, and there were a bunch of, people who have a lot of experience in the industry. And this guy said, oh, tomorrow I'm going to be in there buying like crazy because everything's on sale. And if I could have reached through my phone and smacked that person, I would have. Because my question is to myself and to anyone else, years ago, before I was a coach, I had a friend and I knew she had bought the stock, and the stock was downtrending. So I was a student of this education, but I wasn't a coach yet. And so I knew it was downtrending. And I said, oh, did you get out of that position? She said, are you kidding? It's on sale. So I'm buying more. And, she bought it first at, say, $65 a share. It was now trading around 38 or something like that. By the time the dust settled, it was down to 11. But, it was trading below the 10-day moving average, below the 30-day moving average. So if you want to have a bullish position, what are your rules for entry? And if you don't have rules, now might be a time to create some. Yeah. And Peter is saying, trade what you see, not what you feel. And I remember one of the first coaches that I followed and listened to regularly, that was one of his mantras. And, and so what does that mean? And how do I how do I employ that in my trading? Well, and let me give you an example. So on Wednesday, we looked at CRM. And so the trading price patterns class, I treat as a companion to this class. So we have a stock, where we had, what do we call that pattern? Head and shoulders, right? And then it broke down. Let me get my drawing tool. Out. Sorry. Can you tell? I think that was from yesterday's class. But, we had this, or a double top. Either way, so if it's a double top, oops, actually, and then it breaks down, now we're seeing this series of bear flags, right? And I'm being kind of sloppy. And then it kind of went sideways. And on Wednesday, it looked like it was moving up, but we said, hey, if this goes down tomorrow And so we put in a conditional order. And so this is an example of seeing a downtrend, seeing a consolidation, looking at the stock and having an expectation. So what are we thinking? We're thinking that the stock might go down, but we're not willing to commit to that because we don't see what? We don't see a close below or a trade below the low of the high day yet. And what do we have? We have rules. What do we have? We have a trading plan. What do we do with our trading plan? We follow it. And so we put in a conditional order. And what happened? Well, the next morning at the market open, it filled and we bought a long put and we said, you know what? This is such a crazy market. We don't know what's going to happen. But if it falls, we think it might fall enough. And I think, you know, we had a 1 ATR target. So we got in and out very quickly on that. And you might say, well, that was kind of a poor judgment because, you know, if you'd stayed in one more day, we would have made a lot more. And that's true. But if we come and we look at this and we say, you know, but we were, sorry, coming to the monitor tab, this was CRM. Okay, and let's just kind of clean this up so that we're just looking at what we really want to see here. So we put this in on Wednesday. It filled Thursday morning because we put a conditional order in at 7:31, and less than 40 minutes later, it hit our target and we were out. So, and how did we do? We did nicely. You know, and you know, hindsight's always 2020, but you know, when we look at this and we say, okay, we paid $370 to get in, and you know, we received $615 when it hit our target and we got out. So we were up by $245. How much could we have lost? This entire amount. So what was our return on risk? Well, it was about 66%. Now, you know, some might be saying, gee, I wish we'd done a whole bunch of those, you know, and yes, I do, you know, but that worked out just fine. Now, if you want to rub salt in your own wound, you could go and see what that 240 put expiring in May is trading for now. And I'm sure it's trading for much, much more. But, you know, it was a base hit and we were trying to, our goal was to not trade what we think. Okay, we're going to trade what we see happening on the charts, and we were setting up so we would only enter that trade, you know, if it met our trading rules. And then we had a modest target. Now, if we came back out to CRM that May, what was it? May 240 put. Yeah, it would now be worth $13 to $14. But, you know, it was a base hit. And so this is, you know, what we mean. And if you don't want to get caught up in one of two things, one being fear, and the second one being FOMO. And why am I bringing up FOMO? Because the person that made that comment in that thing, in that chat room saying, oh, tomorrow I'm going to go in and buy as much as I can, they were operating, I think, based on FOMO. They didn't want to miss out. But let's look at something like CRM. And I know I'm spending more time on this today, but I think that this psychology behind how we treat things is so important. You know, so, you know, if we look at CRM and we said, okay, it's been consolidating. So actually, let's go back a year. So, you know, we had this big down day here on May 30th, and then it starts to rally. And so we might have looked at this and said, hey, I see, you know, this inverted head and shoulders pattern here. And so I see an entry here. Do you see what I'm saying? Now, if we see an entry here and we place our entry here, that's the first day out. Now, some might say, I'm going to see if it comes back and retests. And so some might say, well, here would have been another entry. Do you see that? Because it went up, pulled back, and then started up again. And some might say, well, hey, we didn't get in here at, what would that price be? Around this 260, 270 mark. We're now getting in at 277. Like, we're losers because we didn't see this early enough. And actually, both of these people are losers because the day they really should have gone in was this day here. But what confirmation did we have on this day that we were done falling? None. None. And so if you say, well, you know what? I don't have to get the absolute bottom. If I had gotten in on this day, September 24th, and let's say I'm buying a stock and I talked about this trading plan and getting started with technical analysis. This is, a stock trading plan. It was one of the first ones I had. It was a 3 green arrows. And I'm not going to go through all the details because I talked about a 1 green arrow plan, which was just, and I have this, green arrow and red arrow showing up on my chart. If you want to see how that happens, if you come to studies, and it's kind of like Trivial Pursuit. You don't notice it until you notice it, but you'll notice this simple moving average says, okay, it's based on 30 days, the closing price of each of those 30 days, and then their default is a no. Well, if you click on this and come here, it says show breakout signals. And what it'll do is it'll give you a red arrow if it closes below that line, the day it closes, and a green arrow when it comes above. And so this example trading plan was pretty simple. And it said, hey, if you get in when it goes above, and you want to exercise some discretion in here, above the 30-day moving average. And so it may have happened on this day, but if we're waiting for a more significant breakout, we may have waited till this day. So if we got in this day, and then the kind of rule of thumb is if it comes back and closes back below the 30-day moving average, we tighten our stop up. So our first stop might have been somewhere around here. And then if we'd moved our stop up 3% below the low of that day, maybe it was around here. And, and maybe we would have been out maybe about this price, 340-ish or 330, call it 335. Well, if we got in at 265-ish and out around 335, how did we do? Well, 265, let me just do the math on my calculator. 335 minus 265, that's $70. We were up, and this is just all approximation, I'm going like this. So, but, based on, an example trading plan, did we get in at the bottom? No. Did we get out at the tippy top? No. We got what? About, half the move? But if I look at 70, man, what was my return on my investment? If I made $70 on something I paid $265 for, well, that looks like at least 20%. 70 divided by 265, 26%. Like, that's more than a base hit, my friends. And so the message I'm trying to convey today is, keep in mind, I've been saying for years now that fear, FOMO, and just in case you thought today was sponsored by the letter F, the other one in here is hope. These, and I'm not saying not to be hopeful, but hope is not a plan. Like, when something starts going down, you could say, well, I love CRM. I think it's a good company and I'm hoping it's going to go back up. That is not a strategy, my friends. So eradicate these from your trading. and it will serve you well. I think you'll find you sleep better at night. And we do not have to worry about catching the absolute bottom. But what we want to be sure is that we don't, jump in the boat when it's halfway down the waterfall. Because if yesterday, you had said like, hey, this is careening through this set of rapids. How exciting. And, everything's on sale. And if we had jumped in the boat yesterday, what would we be doing? We'd be in a merge, tending to our wounds because like, And unless you saw some kind of confirmation. Now, yesterday and after the close, we talked about a collar trading strategy, and we looked at a couple of stocks. Let me just see if I've got my list handy, because that's in a totally different account. And we had actually bought McDonald's quite a while ago, and yesterday it was moving up, and so we had a covered call on that. So today we might want to go back in and take that out. But we looked at buying something that was uptrending, and along with our how do you hug a porcupine philosophy, we looked at, I'm just trying to find my notes from that one. It's been such a crazy week, my friends. That we looked at adding collars. And, but with the market doing what the market's doing today, so, we had this, cup and handle or inverted head and shoulders. We bought 100 shares, sold a covered call, and then bought a protective put at the same time. And when you do that, that is called a collar. But with the markets doing what they're doing today and every single index being down, do we want to look at a bullish strategy? And the answer is perhaps not. Because if we're trying to go with the flow of the market, we want to, go with that downward flow. And it's not being a negative Nancy. It's recognizing what's going on in the market and then looking at how we might take advantage of that. And so one of the questions I get asked a lot, and there's a question in the comments from a class last week, it's like, how did you pick your examples? And so this is, what I did to prepare for today. So I just started looking. It's like, okay, well, Apple, like a lot of other stocks, has had a couple of really bad days. This could be serving as a bottom. This could be like a big inverted hammer. So, but am I confident enough that because it's below this support level to sell a short put vertical? No. Am I confident enough that this now is going to act as a ceiling to sell a short call vertical? No. So what am I going to do? I'm going to move on. And how about Amgen? Well, that candle was looking not nearly that bad the last time I looked at it. But, we've had this kind of bullish configuration. It's come down, but again, when I look at this, am I confident enough to be either bullish or bearish on this? Maybe not. And so do I know what I'm looking for? Kind of, sort of, but not exactly. Like what one might be looking for is something that is bouncing down and hasn't gone down so dramatically that we feel, we may have missed the move. Now, we did a short call vertical that was set to expire April 25th. And we placed that one, I think, on Monday. And if we come to the monitor tab and we look at Amazon, yeah, we opened that one on the 31st. So that was last Friday. We sold it for $1.61, and we are out of that. It closed this morning. Okay. And so, we had a nice return on that. So on a short vertical, this calculation is a little different, right, than a longer vertical. Okay, I'll just leave that. But so how do we calculate that return? Well, we would say, okay, we sold it for 161, we bought it back for 30, so our net gain on it was $1.31. Now, what were we risking? $1.61? No, we were risking $5 minus the $1.61. So we were risking $3.59. We got paid $1.61, sorry, $3.39. So our return on our risk on this, because we could have lost 339, that's our theoretical max loss, was about 38.6%, which is, we made $131, it's a base hit. It's a base hit. Okay. But if we look at this, could we do some form of a wash, rinse, repeat? Well, let's come and look at it and say, okay, well, this trade is now gone. But if we look at this, this could now be back, instead of acting as a support level, act as a ceiling. This diagonal resistance line looked like it was becoming a support line. Could it become a resistance line again? Is there enough volatility we could maybe come up and sell a short call vertical around this 187 mark? So if we came to the trade tab, could we come up and say sell the 190? And let's just look short term. Could we sell the 190 and buy the 195 above where it kind of held its own, and we get $1.10 credit for that. And, we have $15 worth of wiggle room. And if we come and look at this, we're saying, well, this is a potential line of resistance. And here's a second, potential line of resistance. So it's trading, and we would be above this. And then we want to look at our earnings May 6th. Would we be out by May 6th on this? Yeah, April 25th. So we're going to put in first trigger sequence. And so in spite of the chaos, are we trying to find an example trade that would be perhaps a conservative way to take advantage of this volatility? And that's what we're trying to do. So we'd buy it back when we've got 80% of our max gain. We're going to put that in our short call vertical group. Short call verticals. Fire in the hall. Okay, so I just kept clicking through, and so what are we looking for? Something that hasn't fallen so far that it might be difficult to get enough premium. Like we're looking for still a valid entry. So yesterday it was breaking below support. Now we've got this hammer, which, and it could continue to fall. Like we had a hammer pattern here. And did we have confirmation? No, it continued to fall. So it could continue to fall. But, if we wanted to sell something, might we want to sell it above that 250 level? Yeah. Yeah. So, could we look at that 255? We could. Or we could say maybe we wait and see if it bounces on Monday. But if we came out here and we said 255, we get $1.50 for that. And so if we said, okay, so we're risking 350 to make potentially $1.50. And so if we look at this, and I'm just going to switch this to my calculator and say, okay, I can make, okay, it was $1.50. Just hang with me here, 350. So that would be a 42%. Now it's like more 140. Well, now it's dropping before our very eyes. Like the market it's interesting, divided by, what would that be? 5, oops, 363. But it's going to be, 37. We're in it for 21 days. Now it's back up to $1.47. So if we say, okay, at 255, if I look at that on the charts, that's above here. Am I okay with that? And if you're not, then you wouldn't place the trade. But if you're thinking like, hey, I'm up above here, even with this candle, this pattern could continue. And even if it bounces up, is it likely to go back above 255? And if you're thinking, yeah, it absolutely could. Well, anything is possible. That's why position sizing is a rule, right? So right click, opposite order, we're going to make this 30 cents, which is approximately 80%. Good till canceled, fire in the hole, short, call vertical bucket. Okay. Okay, so let's look at Goldman Sachs. So clicking right along, I'm skipping a few, 1, 2, skip a few, 99, 100. So again, the financials were just cruising along doing oh so sweet. And then this came down and broke down below this, previous kind of support level. Seemed to find support here, came up. Did it ever make it back? So again, this is one of those things like just in case you didn't get the point with the last one, like if we went back and used that like stock investing simple idea of when it crosses the 30-day moving average and you get that green arrow. So again, we might have bought on that day. We might have waited and got in here. And when, if you tightened up your stop, sorry, there we go. If you tightened up your stop, would you have been out here? Perhaps. So let's say you got out on this day, and I'm not sure if you would have, but if you got out here, got back in here, you would have made a nice return there, got in here, tightened up your stop. You would have been out somewhere around here-ish, somewhere in this neighborhood. Would you be back in yet for a bullish trade? No. Because if your rule is you're going to look at re-entering or consider re-entering when it goes back above the 30-day moving average, is it back there yet? No. And so, you made maybe a small return there. You at least broke even. Here, you made a really nice return, and now you're sitting on the sidelines. But could you, as much as you, this is just an example. You may love Goldman Sachs. You may hate them. I'm not talking fundamentals or anything here, but could we look at this and say, well, in the meantime, while I'm not, owning this stock, might I sell a short call vertical here at this 525 level? Now, would we have received a lot more for it yesterday? Well, maybe, but look at the VIX today. It's so much higher that, maybe that'll compensate for the fact that the stock is trading lower. But, and you might say, well, if I think it's going to continue to fall, why wouldn't I just sell it above today's candle? Well, it's your trading plan. You can do whatever you want. But me, looking at an example to share with you and saying, like, how can we take advantage of this craziness going on in the market in a way that's kind of conservative? And some might say, like, are you nuts? Like, is that even possible? Well, I'm just trying to show you, something that some might consider a possibility. Because if you look at the top of this candle as a potential resistance level, and then you look at this former support, hit once, hit twice before it broke through, well, now it's got to get back up above. And the first day it tried, didn't do so well. Like, could we come up to this 525? And we've got like $50 worth of wiggle room if we can pull it off, if we get enough premium. So if I come out here, I need more. And you know, why am I choosing 21 days? Because my time decay is going to be accelerated, including Saturday and Sunday when the markets aren't even open, thank goodness. You know, I've got a 60 cent bid ask spread. That's acceptable number of contracts. We have a 21% chance of this being in the money at expiration. So we have an, 79% chance that it's going to expire worthless. Now, the question is there enough juice to make it worth the squeeze? So 125 divided by 375, if you do enough of these, you'd go, yeah, for 21 days, that's, about 30%, is 33%. It meets our requirements. And some might say, like, I don't care if it's 21 days, I want at least a 25% potential return. And I'm not taking transaction costs or anything like that into account. 24. Yeah. Confirm and send. How many of these are we doing? 1. If we're really confident in ourselves, should we break our position sizing rule? Never. No. That's that FOMO thing. Do we trade based on FOMO? Because you're missing out. You're thinking, I could be making more, but you could also be losing more. You have to there's a yin and a yang. And although there are some rules, like we want to get out when we have an 80% gain, if on Monday we're up 60%, might that be good enough? Because we're willing to be in this for, almost 3 weeks. If we're in it, for one trading day and we can get half our max gain, like, might we choose to exit? Sure. And, and is that a rule that we can massage or a guideline that we can change? Yes. Our position sizing rules, like if your account, you might say at the beginning of every quarter, I'm going to readjust my position sizing based on the current balance. Yeah, that might be legit, but have a plan and stick to your plan. Okay, have I said that enough today? Are you guys going, man, she's sounding like, a broken record? Yeah, so Siri, okay, so we'll close with this. Siri saying go big or go home. Sometimes if you go big, you end up having to go home. And just in case you haven't met someone who's blown up their account, I've met several. And guys, this is serious stuff. Like, money isn't all that in a bag of chips, but it's right up there with oxygen if you don't have enough of it. And it's important that you treat your trading like a business. And I can tell you, any business has a set of rules. You go into Starbucks here or in Dallas and you ask for a cappuccino or whatever fancy drink you want, they're going to make it the same way every time. They treat their business with discipline and consistency. They're not going, the sun is shining, it's been snowing, I'm going to ski, I think I'll just close the shop today. And you go to buy your morning coffee and they're not there. How long do you think they'd stay in business? Not very long. So yeah, if you go big, you may end up with the opportunity to go home. Yeah. So thank you so much for putting that in there. Appreciate it. Yeah, that you only live once. Well, you may not be living very high on the hog, if you don't employ discipline. But there are opportunities out there. And, we could look at J&J. I was going to look at a long put, possibly. But, could we look at a similar kind of thing there? Sure, we could. Or Home Depot, the Depot. Could we do that? Yeah. So guys, that is our class for today. We are out of time. It goes by so quickly, doesn't it? Here's my ask. If you could please hit the like button, it lets Connie and I know you found this content valuable. But more importantly, it moves this up in the trading algorithm so more people can find this content. So you're doing a favor for a random stranger and you don't even have to leave your seat. So thanks for that. Hit the subscribe channel if you haven't already subscribed to the channel. It's where all of these archives are found and lots of other great content. If you want to see an example trading plan, go to the trade management mini session playlist on the Trader Talks from Schwab Coaching. Follow Connie and I, Connie Hill CS, Barb Armstrong CS, in the land of X. Get out there and hug someone you love this weekend, guys. Have a really great rest of your day. And I will see you Monday for more Trading a Smaller Account. Take care, everyone. Thanks, Connie, for all your help in the chat today. And thanks to the guys behind the scenes. Bye for now.